Hey, my name's James Nicholson. Welcome to my YouTube channel. In this video, I want to talk about why interest rates might be about to drop in the next 2 weeks and why, if they do, it's essential that you jump on these rates very, very quickly because they won't be here to stay. Something's happened in the market and it's already been corrected since, and there's a little window of opportunity where we saw this happen with an Indian bank last year that went ahead and put a certain amount of money, like 100 million, into the market and said, we'll lend this at 3.5%. And when it's gone, it's gone. One lender has already taken this up and has dropped their mortgage rates in the last few days. So we're going to talk about all of that and more in this video. Now, if you haven't subscribed to this channel, make sure you subscribe over there right now. Hit the bell notification. We're on our way to 50,000 subscribers. That's our goal for this year. We're not halfway there yet, but we're almost halfway. And every subscriber helps. And while you're here, smash the like button, tickle the like button, do something to the like button. That really helps me with the YouTube algorithm. Everyone that likes the video, it pushes it out to more people. I really appreciate everyone that does that. I want to hit 5 million views this year, so do help me with that. So what's going on? Well, banks, they borrow from bigger banks, right? And they borrow on a rate that's not quite the same as what you would expect. Now, there's a lot of talk about inflation, and that's been going on for over a year. We've been talking about it. It's been going on longer than that, the inflation, but it's really been headline news for about 1 year. And so when the inflation went up, the only real mechanism there was to counter that was for the Bank of England to put interest rates up. And they did that 14 consecutive times in a row. 14 consecutive times. They went from pretty much 0 to 5.25%. Now, banks, they don't borrow off that rate. They borrow off other bigger banks on something called a swap rate. And you might recall that at the back end of last year, banks weren't lending much. In fact, their lending was down for some around 20%. There was 20% less transactions in 2023 than a normal year. And so that was a significant downward trend. And so banks at that stage, they wanted to get competitive. The rate that they could borrow at started to drop. And that was on the assumption that inflation was actually going to improve a lot quicker, and that it was looking like inflation could be near the 2% target by as early as April. Now, that might still happen. We're not sure. But what happened was the bank swap rate started to drop significantly. So in December and in January, you saw some very generous discounts from lenders. And that wasn't to help you. That was to help them. They wanted to get more lending out, more transactions happening, and that worked. And so January this year, the market got really busy. 15% increase in transactions compared to January last year, which is a great start to the year, I'm sure you would agree. And then banks got inundated with business. Then the swap rate started creeping back up. The money rate that they borrow at started to creep back up. And in the last 2 weeks, you've seen literally every single day a new lender, HSBC, NatWest, Nationwide, all of them have been putting up the rates to you. The rate that you borrow at has significantly increased, about 0.5% by some lenders in as little as 2 weeks, which is quite frustrating. Well, what's happened? They had a blip. And so in the last 7 days, the swap rate started to go down again. Now, this only happened for a very short window, and analysts expect that when the rate drops, it allows banks to go and get some money at a cheaper rate, that it takes about 2 weeks until we feel that, and that gets passed on to us. And so far, one lender, Coventry Building Society, have dropped their rates. They've dropped all of their rates on their residential, on their buy-to-let, and that's really making a difference for some people. Now, more people might do that. More lenders might do that. This is dependent on a few things. One, did they go out and get the money at the cheaper rate? Did they secure some lending at that? How much did they get? Maybe they got a couple of billion, hundreds of millions. I don't know. And do they want to pass that on to get that money lent quickly, or do they want to increase their margins? Of course, likely is that they want to increase the margin, but if the market has slowed down again, this will give them some leverage, like Coventry have, to say, you know what, we've got some cheaper money over here, but it's in limited supply. So if you've got a remortgage coming up at the moment, and that's possible for hundreds of thousands of people that are in the UK right now, maybe keep an eye on what happens with the rates over the next few days. If a rate drops, jump on it fast, because it's likely that it will only be there for a short period of time before they run out of that money at a cheaper rate that they got, and then the rates go back up to normal. You could see, because what happened in the last few weeks is, since they've all been putting rates back up, they've all got negative publicity, haven't they? The newspapers and such like have been talking about them making it more difficult for people to borrow money. So even if they just did it with a short amount of money for a short period of time, they could get some very positive PR quickly, right? And then that old stuff gets forgotten very quickly and they're back in the news. And this is a way that banks actually advertise and market. When you're cutting a rate, you put that out to all the newspapers and they do the advertising for you. You don't even have to buy an advert in that newspaper. Because of where the market is right now, it's such a news story. It'll get featured in the news and that will bring more eyeballs onto that paper. That will bring more business into that bank. So what I'm saying is, swap rates dropped short term. Hopefully your bank that you want to borrow from took advantage of that. So now you want to keep an eye on, does that mean that you'll potentially get a cheaper rate for a short period of time? If it does, jump on it fast, because it won't be there for long, because the swap rate has already gone back up. Coventry have dropped their rates. Others potentially will do the same, but I bet you Coventry rate will go back up in a week or two for sure. Let me know your thoughts on this in the comments below. Do smash subscribe if you haven't done already. If you haven't joined the Lease Option Accelerator, go and check it out in the description below. That will allow you to secure property and control property from as little as £1. It's a great strategy in an uncertain market like this. It can really, really help people out. Do check out some other content on the channel while you're here as well. We've got nearly 700 videos now on the channel. So why don't you start by going and watching this video right here.